Good morning, Armor Insiders, and welcome everybody to our Wednesday Q&A. So we're going to talk about how we're managing our assets here at our virtual hedge fund. I'm going to go over with you where we are in the cycle. 8 out of 10 stocks follow the market. So when it comes to managing money at this virtual hedge fund, we start with our swing strategies for indexes, and then from there flows our investments into innovative growth, turnaround stories, and dividend stocks. And that's how we build our flagship fund that I share with you. Flagship fund I use to manage assets for others, right? So I manage my own personal capital. And then what I do is I manage capital for others through our Rosenthal Capital Management business, right? So when I'm structuring portfolios for individuals who've asked me to do that, we use the flagship fund as the base case. And then we get a little more aggressive or a little more conservative depending on the individual we're working with. So I'm going to go over with you what that flagship fund looks like. So we'll go over stocks to buy, stocks to watch, and some other details from the day that will probably affect what may be our next step in our swing cycle. And that is that we're looking for trade number 22. And I'll go over that in a minute. All right. So before I get started, don't forget it's a virtual hedge fund. What I ask you to do is be a portfolio manager on this desk at our morning meeting. Grab a pen, piece of paper, get yourself ready, figure out your strategy, figure out your risk tolerance, what your goals are. And then no matter what I say, you have to execute your strategy. Only you can be the smart money of your own assets. Nobody else can do that for you. All right. So let's dive in. Step one, before we get to Oddity, before we get to NVDA, which are our highlighted stocks today, let's start with the market. Quick refresher. How do we manage capital here on this desk? It's really very simple. We boil it down to stages of swing strategies for the indexes. We call that our risk monitor. When the risk monitor goes green, we put capital to work aggressively. Then as we get further and further away from that buy point, what we end up doing is switching to what I call managed success mode. And that's what we're in now. And when we're managing success, it means we're booking profits at targets if we choose to. We're raising stops as we go. If it's a swing trading stop, it's a very aggressive raise of the stop. If we're looking at a position for more investing purposes, the stop is more lenient. We don't raise it as fast. Swing trading stops are daily. Investing stops are weekly. So at 3:30 each day, you can, Armor Insiders, tune into the live feed, and we go over what our portfolio looks like, and is there anything on the chopping block. We have one name on the chopping block right now, and I'll share that with you in a minute. But so we're raising our stops, and then of course 3:30 on Friday is most important, because that's when we look at everything in the portfolio and determine, is there anything we need to remove from the portfolio to protect capital? Is it a lagging position we don't want anymore? Is it violated a stop? We do all that 3:30 on Friday. Okay, so where are we in this cycle right now? If you look at this chart right here, and I'll just zoom in a bit. This green box right here was risk monitor green for us. So we were aggressively long, as close to the stop as we could. As soon as we get that risk on green, we load up the portfolio. So we've had a wonderful rip. We're in managed success mode. Now what we're looking for, one of two things is going to happen. Either the next swing cycle leg up is about to happen, and I call that trade number 22. I'll show you that in a minute. Or obviously, bang, the market goes down, all of our stops get hit, and we have to raise cash. That's a really easy situation. We don't like it, right? Because, I mean, it's kind of fun to make a lot of money along the market. But if we hit stops, we go to cash, and that's the money we made on this cycle. Okay? So let's skip over to the highlighted stock of the day, which has to be NVIDIA. We put NVIDIA into the portfolio down in here. When the risk monitor went green, we were buying NVIDIA. Stock has popped. Company announces earnings tonight. This may or may not have the effect of either creating trade number 22 for us, which again, I'll go over in a minute, or maybe it's the end of this swing cycle. Do I really believe that? Not really. I think people are still living in the past when NVIDIA 2023, 2024 earnings announcements, the stock would skyrocket 30, 40%. We're not in that phase anymore. And the last couple of earnings announcements have been kind of quiet for the stock, which would quiet to me is a 10% move in either direction. I think I saw the other day that options market is pricing in like a 6 to 7% move in either direction for NVIDIA. So it's not that big of a deal, but everyone loves to focus on it and extrapolate. Does this have an effect on every AI story? And I really don't think that's the case anymore. Partially why NVIDIA's had some issues. We see analysts have downgraded their expectations going into this quarter. And of course, it has to do with tariffs and China and all those types of things. So it's going to make for kind of a muddy quarter is my guess. But there's been a lot of analyst expectation for difficulties this quarter, which could open the window for a better than expected number. So I don't know, 50-50. I'm not really sold on the idea that today's story from NVIDIA is going to make or break the market, even though they're telling you that all over CNBC. We'll see. On our desk, I really don't care about that noise. I'm going to read and react to what a lot of the times you have a great earnings announcement, stock craters. Market's telling you something, right? So it's not really a question of what the news is. It's the reaction to the news. We'll get it after the market closes, and we'll see where this new upcycle takes us. NVIDIA went through the 4 stages of a breakout back here, 1, 2, 3, and 4, and then topped, and it set up a new base, and it's starting all over again. So this is the first test. Now, what we like to do on this desk, when we buy something in front of earnings, a few weeks ago, stocks up in front of earnings, I generally book some profits before the news. I don't care what the number is, 20% of the position, 25%. Sometimes I'll sell 50% of the position in front of the number. Remember, we did that on Doximity because we didn't like the way the stock was trading. Whatever the number, you make that decision yourself. It kind of depends on the position size in the portfolio. If it's a big position, I'm going to cut it back some before the number. It's a win-win that way for me. If it blows out on earnings, that's great. I still got a great position. Maybe I have 75% of my position still on. Great, making money. But I booked some off the top. And if the stock gaps down on earnings, it puts us in the driver's seat to figure out how we want to deal with that. In some cases, I'll give you an example. We did it on Palantir as an example. We sold Palantir in that yellow box, about 25% of the position. So we bought it here. Stock ran up into earnings. We sold a quarter of the position. It gapped down 15% on the number. And I said to you guys on that gap down, that's ridiculous. It's a phenomenal number. And we're going to take the opportunity to buy back what we sold 15% higher. So what I call that is trading around the core. It's just smart risk management. And so with NVIDIA, obviously I'm going to take a little bit off the top, probably the same number, probably 25% of the position, I'll reduce it. And then, like I said, it's a win-win. Skyrocket's great. Comes down, gives us a chance to add. Hey, we did that also. Just to give you another example, we did it on IBM. We did it on IBM. Stock gap down, loaded up, bang. Okay? Palantir, IBM. And as an example, here's an idea. We sold a half the position here on Doximity, and it got hammered on earnings. So we sell the other half down here. We bought it in here, net, not that big of a deal for us. That's risk management. Every time you go into an earnings announcement, you don't know. You don't know what the response is going to be. So we manage risk. This is the managed success part of the cycle that we're in. So let's go back to the cycle and say, okay, what happens next? Trade number 22. What's trade number 22? We have a swing strategy going back 31 months. We're up 145% on the strategy. You guys have been doing it with me. So, I mean, this is not back testing. This is actual trades starting back in 2022. And I just mark for you every trade that this swing strategy executes. Trade 21 was here. We booked a profit in the pink box. We were up 12.5% on that trade. And now we're looking for the next trade. Sometimes we buy things back cheaper. Sometimes we pay up for them. It doesn't make a difference. We're just looking to get the cream off the top every time the algo gives us a risk on entry. This looks like the next setup is about to be upon us. This will be like a 4-bar reversal. Okay. It almost gave us trade 22 yesterday, but it just didn't. So we would need a follow through off of yesterday, which would probably take us above the high of yesterday. And we would get long for trade number 22. Now, let me explain what that means. Okay. If that happens, trade 22 will fire. So this strategy will get long for the next trade. This strategy is an aggressive trading strategy, 9-day holding period on average. If you're in a wild bull market, we can end up holding 20, 25, 28 days. Sometimes that happens. But on average, it's a 9-day holding window. We're just getting the cream off the top with every surge. But I use this strategy to help manage the flagship fund. Right now, the flagship fund's got about 12.5% cash. Okay. That cash will get put to work if trade number 21 fires. So I may own triple the S&P for portfolios and just follow trade 21. I might put that cash to work that way. I might put the cash to work in a more conservative way. Maybe I use double the S&P. Maybe I'm using the momentum index. Maybe I'm increasing index positions for my conservative flagship portfolios that I manage. For my more aggressive portfolios that I manage, I might use that entry point on the market. 8 out of 10 stocks follow the market. So if we get that entry point on the market, you might see me put that 12.5% to work in innovative growth stocks. I mean, the ARMR Innovative Growth portfolio is just having a banner year right now. It's just skyrocketing. Money's just flowing into innovative growth. I don't know about you guys, but I just loved this job. I love waking up every single morning and getting to my desk and seeing what stock in our portfolio is gapping up. That's a bull market. It's almost like a birthday morning. You run down, what's the present? And I love this job because every day is an opportunity to make the right decision, right? Every day is an opportunity to crush it and make money. Now you say to me, not in a bear market. You know what? I love it in a bear market. In a bear market, there's a decision to be made to protect capital and avoid the meltdown, which sets you up to harvest alpha, beat the market, and have a run like this. 2025 has been a microcosm of that, right? We exited the market here. Right there is where we exited the market. Literally the top. Market cratered and we loaded up right here. So we're just having a banner year this year and it's lots of fun. But what I'm saying about the market in general, if you don't love what you're doing, if you don't love doing this, then maybe you shouldn't do it. There's two reasons why I manage capital for other individuals. I have ARMR insiders that ask me, will I take on capital? And I've opened that window. For a long time, I didn't take on new capital, but I've decided to help out ARMR insiders who are asking me to, I'll do it. And there's really two reasons why they request it. One, they're having a hard time taking the information and execute it. It's not easy. It's not easy. I can share the information with you, but don't feel bad about it if you have a hard time connecting the dots. It's hard to execute, because in order to execute right, you almost always have to go against your human emotion. When you're afraid, that's when you're loading up. When you're excited and everyone's cheerleading, that's when you're managing risk and managing success and not chasing. It's the exact opposite emotionally. So sometimes hard for someone to do that. I'm happy to do it for them. The other time is, guys, you guys are having a great run, but you don't want to sit at the desk all day. And that's what I do. I mean, this is not like a job for me. This is like a hobby. It's like I don't know. It's like my life, So I do it. So those are the two reasons why I take on new capital. But anyway, it's just tons of fun. I hope you guys are having as much fun as I am. All right. So we're at that phase in the cycle. We have some cash in the portfolio. We're looking for trade 22. When it happens, we either add index exposure or we add our favorite individual names. Let me give you an example of a favorite individual name and how we do it. Another highlighted stock of the day has to be Oddity. I'm going to share with you a piece of information here. You're going to want to write this down respectfully, in all humility. You're going to want to remember this, because you're going to make a lot of money doing this during your life as an investor. There are times when a CEO sells stock and it's wildly bullish for the investor. Right? That's a mind blower, because everybody tells you when insiders sell, it's terrible for the stock. But they're wrong. They're wrong. I've always said they're wrong. I've always said this to you guys. Insider buying, I think, is worth something. There's only one reason why an insider buys his stock, because he has confidence in his business. There's many reasons why insiders sell. Sometimes it's negative. Other times it's a divorce. You just don't know. But there's sometimes when an insider sells and it's wildly bullish. And that just happened in Oddity. Now, Oddity is an ARMR power play name. I call us power play investors. The ARMR Innovative Growth portfolio is full of power play investments. What makes a power play is a company who's got a moat around their business, rising margins, explosive earnings, and a unique dominant position in some type of niche. Right now, that key niche is in AI. Okay. We all know what's going on in AI. So what we're looking for on this desk are dominant niche players that are using AI to advance their business and create a moat around the business while margins are expanded. All of these things are going on in Oddity. So we have that at the top of our whiteboard to own. And they had the earnings announcement and the stock just blew out, just skyrocketed. We didn't chase it. We don't chase on this desk. We're patient. We said we're going to be patient. At some point, the stock will consolidate. It'll sell off, whatever. And that's our shot to put capital to work. What happened here is the stock gapped down from 73 down to 60. Okay. Because the CEO of the company said that he's going to be, here you go. He's going to be selling 5.5 million shares. So the stock gapped down on that. And on that day, I said to you guys, this is our shot to buy the stock at $60 to $62 a share. We paid 61 and change. That was our shot. The reason the CEO is selling 5.5 million shares is that the stock is totally illiquid. And I said to you for a while, we've been following this company for a while. It's been on the whiteboard for a while. And I said to you guys, the biggest problem for me is that the stock trades with a 75-cent spread. It's ridiculous. It's not liquid enough. There are not enough shares trading on the exchange to make this a legitimate investment. Not just for me, but for institutions. You know, on our desk, we say two things. Information makes money. Institutions make markets. Institutions can't buy a stock that's not liquid. It was the biggest problem for this company. When the CEO, who has a dominant position in the shares, the guy owns most of the company, comes out and sells 5.5 million shares, it's making the stock more liquid. And that will allow institutions to come in, and that's what's going to put the stock up. So we bought the stock at 61 and change on that collapse. Stock is pushing 73 now, about to make a new high. Stock's up over 20% in 9 trading sessions. And I share that with you so that you remember this. Write it down in your book. It's a valuable piece of information I'm sharing with you. Not all insider sales are bad. Some are very good. And the best is when there's an illiquid stock that needs more liquidity and more shares come out. And there it is. All right. So a couple more thoughts for you. Let's run over to the Cannabis Couch for a minute. All right. Stock of MSOS is just a basic guide, right? I already told you guys that I've added some out of the money calls, right? What's the strategy here for us on the Cannabis Couch, on this virtual hedge fund desk? I don't care about cannabis stocks. I'm not buying cannabis stocks. Okay. I think one day cannabis stocks are going to go up huge. I don't know when. So I own way out of the money call options out through January. So I don't have to think about it. I don't jump from pillar to post on every news story. Stock's down a little bit yesterday because the appellate court denied a lawsuit that's going on to try to prove that the federal prohibition is unconstitutional. We all know that wasn't going to work. And really, it's another step in the process to get this to the Supreme Court. Okay. So they're going to take this now to the Supreme Court and say, how is it fair that there's federal prohibition when a bunch of states have made it legal? Something's not right there. So there's many different ways this cannabis story can play out. We can either get legislation, which would be great, right? At some point, DEA decides to make a decision that, you know, maybe schedule S3 instead of S1. That'll be a game changer. Maybe the Supreme Court comes down with a ruling. Who knows? Who knows? Okay. But my message to you on cannabis right now is I don't care, and neither should you. I don't care, and neither should you. Don't run pillar to post on stories about Supreme Court, this, that, and the other thing. For me, I've set up a position so that if I wake up Monday morning, if I see a story Sunday night of some game changer, and they can't open these things because they're gapping out, you know, there's massive short positions, right? So if anything ever happens, these stocks are going to go to the moon. I'm going to make a fortune in my calls. I'm willing to give that money away. They're lottery tickets, right? When you buy a lottery ticket, you expect to lose money. If the lottery ticket hits, you make a fortune, right? But you expect to lose money. And the beauty of that position for me is I don't have to care about the rest of the noise. Okay? The only decision I'm thinking about right now is innovative properties. Do I have an interest in buying innovative properties again? And we've made, in all fairness, okay, just so everybody knows what page we're on this desk, ARMR Insiders, we've made a lot of money on innovative properties over the last 5 years. We buy extreme weakness when the yield is at its highest, when all the bad news is out. We collect the dividend, stock rallies, we raise our stops, and at some point we get stopped out. Look, this is my favorite way to play cannabis. If there's ever a descheduling, a rescheduling, whatever, and 280E goes away, all of the tenants of this REIT are going to have a cash windfall. And 13+% dividend yield won't make sense. It's trading 13% because there have been a couple companies, they had to rework the lease, a couple bankruptcies. It's ugly. Don't get me wrong. It's ugly. But that also creates opportunity. Okay. I'll give you another example. I talked about this yesterday. I'm starting to put some money in Pfizer. Okay. At some point, Pfizer at a 7% yield is a no-brainer. I'm buying some in the bottoming wedge. If it breaks out, I'll buy some more. Right? It's the same story as owning AT&T down here. Bottoming wedge when everyone hated it. Dividend's going to be cut. Too much debt. Going to go bankrupt. Blah, blah, blah. We loaded up. $14. 8.8% yield. Now the stock's 28. We still own the stock. Okay? So there are times to buy a distressed asset that's blue chip with a dividend yield that they can service, right? So some dividend yields are going to get cut. That happens. Others, the market's mispricing it, and there's an opportunity. So I'm nibbling on Pfizer, and I might start nibbling on Innovative Properties. I don't know. Okay. Those are my thoughts for the trading session today. We're going to read and react to whatever happens on NVIDIA tonight. Trade 22 will either start, and we'll be putting more capital to work by the end of this week, or boom, stops are getting hit and we're raising cash. Right now, our best move is to stay away from the keyboard and don't mess up a good thing. We loaded up right on the 24th of April, and we're having a great run, and we'll just execute the strategy and not guess what's going to happen next and not chase what's going on over here. We're in a wild bull market right now. There are too many ideas for the capital that we have. Innovative growth, quantum computing, uranium's blowing out, precious metals are going up, Bitcoin's going up. I mean, there's just too many ideas. That's how you know you're in a bull market. And we're going to ride that until the stops get hit. We're not going to guess when that's going to end. We're just managing stops. 9:30 ARMR Insiders will get the live trading desk started, and we'll be carry trading the portfolio. We're buying locations, weakness to locations with the Chicago trigger. That's all we're doing. That's all we're doing. Every day we're looking for that trade, and we're buying triple the S&P when we get that trade, or options if you guys like to do it. So we'll get that going today. We'll be doing our research as usual today. We'll go through charts, look for new ideas, and we'll manage the success of the portfolio. Everybody else, thanks for joining. If you have any questions, I'm happy to answer them. Moon Phase Markets, good morning to you from Canada. Nice to see you, my friend. Any questions for anybody? Look, I'm going to be doing Q&A Wednesday every day. I'm going to open it up to all of you to, if you got questions you want to throw in the comment section, I'm happy to answer it. I hope over time you guys will fill up that comment section and we could take this conversation right to 9:30. For today, other than Moon, how you doing, man? Seems kind of quiet out there. So I'm going to wrap this up. But just be clear, every Wednesday we'll be doing this. So if you got questions for us, feel free to come in, join us for the morning meeting, 8:45. Throw your questions in the comment section, and I'm happy to get to them. All right, everyone have a wonderful trading session. And remember what I like to say here on this desk is that you've got to make your own choices. You got to figure out your strategy. What's your risk? What can you handle? What are your goals? Execute that strategy and be the smart money.